All right, folks, we'll give people about 15, 20 seconds to come in, but we are more than excited to kick off this session. So bear with us just another moment or two, and we'll be started. Making sure people are getting in. Yeah, I see more logging. Excellent, excellent. Okay. Another 10 seconds or so. See a few more people coming in. Okay. All right. In the interest and respecting everybody's time, I'm going to kick us off. I want to start with a few housekeeping items first. So we'll have a poll or two. So just look for those to pop up. Most importantly, we want this to be a collaborative session. Our goal is for you to have at least one takeaway, at least one uh, food for thought, something you take back to your office and add some value to your team and your process. So in that spirit, ask questions in the question panel. One of our colleagues will be manning the question panel. We'll try and answer everyone on the session. If not, we'll commit to getting back with answers. So our session today, from field to finance, we really want to talk about the spirit of the project manager's role in the financial management of a project, because it's a key role. And sometimes there's maybe some disconnect between the project management side of the house and the finance side of the house. But I'm really excited for our guest today, so let me get right to it. Our guest today hails from Albuquerque, New Mexico. Fine Albuquerque. What he does in his spare time, well, he has no spare time because he is a full-time dad to 3 beautiful young daughters. I will let him talk a bit about his background, but join me in welcoming to the panel today, Mr. Chris Henderson.
Hey,
Chris?
thanks so much, Frank. It's great to meet everybody. Like Frank said, I'm pleased to be here. I'm a principal with REDW, an advisory and CPA firm. I've been at this for about 20 years. On your side of the table, working as a controller in industry at both New Mexico's largest general contractor and a specialty subcontractor here in the state, and on the public side of things as well as an auditor and advisor to construction clients. So I've got a lot of experience in the conversations we're about to discuss, working together with our project managers and helping to make sure they're properly financially managed as well as operationally. It's great to be here. Thank you for having me.
Oh, Chris, thank you. So just in the spirit of understanding a bit about our audience, I'm going to launch our first poll. I've not tried polls, so fingers crossed I get it right. Okay, looks like I got it up. Hopefully you and the audience can see it. So just take a moment and tell us a bit about your type of work, your company. I see a lot of answers coming in. Okay. Wow, Chris, good mix between general and specialty, almost 50. And then a professional service, other. All right. So this is good because I think the content is relevant to both the specialty and general marketplace. Chris, would you agree?
Oh, absolutely. Yeah, if you've
Okay.
got a project manager you're working with, if you have a finance department, this conversation's for you.
Okay. And then on ERP software, we have a lot of foundation folks. Not surprised, very popular system. Of course, Sage, several Sage systems, Vista. Good mix on ERPs. Well, good news is everything we're covering, the ERP really, the main thing is that there's integration between systems or the processes we're going to talk about, the data, because data is key. That's why I like to go by Data Di Lorenzo. Data is key, and the data is in all these ERPs. So I'm going to stop the poll, and I'm going to run through the slides. I'll share the results for those that want to see them for a moment. Okay, stop sharing. All right. So I'll go through the slides. I want to make everybody aware the slides will be available if you want them, and this whole recording will be available as well. So what we're going to talk about, some of the outline, what PMs need to know to better financial manage their projects or help in the financial management process of said projects. What are some of the common challenges with ERP reporting solutions that address some of these needs today? And spoiler alert, the two that I'm going to reference and ask my expert Chris about is Power BI and Excel, because I use those. Anybody still use Excel out there? No. That's almost a joke question. Yeah, we all do, I think. But what could we be doing better? How do we excel beyond Excel, as I like to say? We'll talk about some real life examples, and then of course, how can ProNovos help? Some of the items, I won't read all this, I know you can all read it, but the project impact that can be had from mismanagement of a job. One project can make or break a company's success. We've seen it. The financial expertise through enhanced communication. How do you better communicate between the PM and the financial side? I've seen everything from Post-its to just a litany of emails. Some use PM collaboration tools, and every tool you use does something to help, but how can we improve? And that's why I asked Chris to be on here with us today. We'll talk about, as I mentioned, some of the reporting solutions. We'll give some real life examples. I've been around the block more times than I care to admit. My colleague Chris has a wealth of experience, so we have some old real life examples I think that might resonate. We'll share. And then what are the most important, I'll say the obvious, I'll call it, and the most important KPIs, KPIs being the key performance indicators that PM should be educated on, know how to read, and know how to utilize. Chris, any word on that before I roll on that you want to mention?
Yeah, it's critically important that as we go through this conversation, the number one thing you should focus on is what are going to be your next steps. And Frank, just like you were saying, the format that next step takes and the data that you're managing is going to be of the utmost importance too. So pay attention to those parts as you're taking notes. I think this will be very valuable.
Thank you, Chris. I agree. And then, of course, how can ProNovos help? So we mentioned tools. I mentioned Power BI, wonderful data visualization tool. I think second to none, though there's Tableau and other tools out there. But I've got about a 4-year experience with Power BI and really enjoyed it. Really good at presenting KPIs and things of that nature. So that's helpful. A lot of folks will use Excel, as we talked about, for their WIP and cost forecast. Chris, you've seen that, I'm sure, correct?
Yeah, I haven't actually heard of Excel. What is that?
Oh my gosh. Okay. Now we know he's a comedian too. All right.
Yeah, this guy.
Keep the jokes coming. But in all seriousness, with Excel, I've got a lot of CFOs I've worked with out there, and they've developed some beautiful Excel spreadsheets, and they're very proud of them. So to get someone to let go of something that they've A, built themselves, B, they're very accustomed to, and C, maybe they have even a bit of ego in it. It's something they built, they're proud of. I get
Hmm.
that, and it's hard to break away. So those are areas, forecast and WIP, customers have solved to some level, I've seen. Excel usually being about 85% of the percentage of folks using for that fix. Where I find that there's a bit more of a gap in an area for improvement is project reviews. When a project manager, in some cases, if it's a monthly review, um, they don't look forward to it. They want to be able
Right.
to kind of head the head low, thumbs up, and we're good. Chris, what do you think about that?
Yeah, people just don't love rows and columns the way that we do in accounting and finance. I agree with you, Frank. The biggest issue with Excel is it's a highly manual tool. Generally speaking, you're collecting data from a couple different data sources, and the second you've got it into Excel, it's already a little bit out of date. Then you have to massage it, you have to summarize it, you have to make sure that the people using that data monitor version control correctly. You got files kind of all over the place. It can be a mess. Can you get to the answers you need? Probably, but it might take you 3 or 4 or 5 or 10 times longer to get there. Love Excel, but it's a tough tool to work through in this process.
Yeah, agreed. And a project to review, a tool that can do that, that's where I believe ProNovo certainly can help, is it gives you a consistent process tool, not to throw more work at a PM, but hopefully
Mm.
streamline that process for them. So we're going to talk about that in any event. And then finally, some contact info on Chris and myself. I'd write Chris's down. He's the most important one on this call. But you have us both. And yes, and some valuable resources. We put some links here summarizing from a variety of sources, the AICPA, CFMA, some ebooks ProNovos has put out. So Chris helped us kind of curate these resources. And this alone might be a reason just to ask for the slides. You can review this info at your leisure
Mhm.
in your own time. So I'm going to stop sharing now, Chris, so we can just talk. So first thing I'd like you to explain to the audience from your perspective, how do you see the project manager's role in this financial process and the financial success of a project?
Yeah, real good question. So again, the PM is in the financial process, typically the first one to receive information that's critical to the organization, critical to managing the project, and the person who's a stakeholder in receiving reports back so that the PMs can manage their jobs successfully. You said it very well, Frank. Any single job could kind of make or break an organization. So it's critical, not just operationally managing your jobs, scheduling, labor, but that financial management is a critical role. Each job is its own microcosm of the organization, its own opportunity to earn profit or incur loss, its own income statement. So it's critical that the project managers are running it like it's their own business baby.
Yeah, no, I absolutely agree. And, um, I want to share a story. I'll save it because the next thing I wanted to ask you about, if you could expand on, is the KPIs that we mentioned briefly in the
Mhm.
agenda. If you could expand on that for our audience, Chris. And, I think a couple things to point out, if you don't mind, is yes,
Please.
here's the KPIs, but how should you use them? Where's the information come from? A little bit more education for our audience. Let's talk. Let's have a discussion on that.
Yeah, appreciate that, Frank. And the ones that we listed on that slide, those are my five favorite. Everybody's going to have your own. I actually feel like at Pronovus on your website, you've got a great list of
Mhm.
dozens of KPIs. So if any of you watching have any questions, go check that list out. There's some great explanations there. Um, my five are a little bit more, I would call them obscure or less obvious than the number one obvious is gross profit margin. But we have to acknowledge gross profit margin has a great degree of estimation in it. And so one of the things that I think, Frank, you and I like to do, and I would definitely recommend to all of the controllers and project managers watching, get down to data that you feel you can rely upon and is somewhat objective. And that's why I chose these five that were shared on the slide. Job borrow is pretty simple. If you have overbilled on a job, billed ahead of your revenue, if you have collected those billings, you've got to maintain that cash in reserve. If you don't, then you're borrowing from that job to turn around and pay other jobs, and that's gonna turn around and bite you as your job closes. That is critical for a project manager to know and monitor. Earned revenue is another one. That is one of my favorites because there's so much that goes into it that if you get your earned revenue correct, then you've managed many other items on your job. That includes the contract value,
Yeah.
yes, your estimates too, your billings, your costs, your budget. And so if you can get all those things together and get your earned revenue right, and here's the most important thing with earned revenue, know how you know that it's right. The sources of data, the reliability of that data, et cetera. So getting that right is critical. That means you've gotten everything underlying that data point correct as well. Um, AR aging, receivables aging. This to
Mm.
me is one of the most critical. Um, Revenue doesn't count. You can earn all the revenue you want in the world, but if you don't collect it, it counts for nothing. You've just incurred a ton of loss. And
Can't
so
pay your
man,
bills with receivables, can you?
that's right. And guess what? You can't pay your employees with receivables. I mean, you may as well be sitting
Yeah.
on top of a pile of spaghetti and meatballs for all it's worth.
Mhm.
So yes, collecting your receivables and PMs, you're the ones who are often creating those invoices, sending those invoices to your contract owners, and yes, collecting them. You should know those forwards and backwards
Yeah.
because that's the lifeblood of not only your project, but your organization too. Um, Net cash is one of my favorites. Now,
Mhm.
many organizations track net cash at the organization wide. I recommend you drill that down to the project. It's very easy to manage, especially in a system like ProNovos, but some of your accounting systems can generate the data necessary as well. Um,
That's right.
On cash in, it's very simply what you've billed minus what's still receivable. That's what you've collected so far. On cash out, and I know there are a bunch of accountants who are about to light up the comments, Frank, and say, well, but hang on, there's cash to accrual differences. And yes, that's absolutely true. You're right. But sometimes on these metrics, getting close enough is good enough. And so I just use total expenses to date minus what's still in payables for that job. That gives me my cash out. And that's a reasonable, although not perfect, measurement of cash out, which I can use then to get net cash for a job. And finally, cash received to date. And I'd like the audience to recognize that I just listed 3 metrics that manage cash.
Yeah.
That's because cash is like blood, and without it, you die. Cash received to date, very obvious for most people. It is simply the total billings minus your receivable balance. So Frank, I hope I didn't go into too much detail there,
Oh,
but those top 5, you manage those well. You've got a great start. And of course, for all of us bleeding heart accountants and finance managers here, we would love to introduce our project managers to a dozen more KPIs. But I would say start with 5, get those done well, and then look at expanding your list.
no, Chris, I think that was great, except you said spaghetti and meatballs. Now I'm hungry. So,
Well,
Italian food, you just got me. But
I knew I
I
could
think
trigger you, Frank.
you did. That was good. But I think one thing to keep in mind is once, and I've seen this as a PM, like anybody in their field, they start to learn the KPIs and the value of them, and
Mhm.
they see the impact to the accuracy of their forecast, or maybe correcting something before it's too late. Then they're thirsty for more. These 3
Yeah.
are really good. What else should I know? So I think that's really on point. And though this doesn't exactly speak to it, I think it resonates enough. I'm going to share the one story that came to mind when you and I were preparing for this. And by the way, folks, Chris is pretty passionate. He's a tough customer. He didn't like what I was saying, so he got me good. But story for another day. We don't have time today. But anyway, this was Chris when I was working with a large GC in Northern California years ago, implementing an ERP. It was Timberline at the time, now
Mhm.
known as Sage 300, but it doesn't really matter. Main point was that company was set up where finance sat on the first floor, all the PMs were upstairs. Well, they hired a new PM. There was no room upstairs for him. So they put him in the bullpen, as they called it, excuse me, down in accounting for about
Mhm.
6 months. Well, what the result of that was when he cycled upstairs, he was by far the best PM. He stood out with his timeliness and accuracy in reporting
Mhm.
to finance because he'd see when a PM would come downstairs and go, oh, all that AIA billing I gave you, this is the one example I remember. It was all wrong. Just change it to this and walk away. Not realizing that accounting person has to do 2 backflips, avoid, a repost, a correction. And so that company made it a policy that PMs would cycle down into accounting for about, I don't know, 3 or 6 months and then back upstairs. The whole point was to be better educated on the information they're sharing, timeliness and accuracy. So, and I think you had a probably even a more on point story, but I think you had a really good case if I remember right.
Yeah, as we were discussing, I've actually got 2 that I want to share. I'll be brief. I've seen it go well, and I've seen it go poorly. And in both cases, actual cold hard cash impacts to these organizations. On the poorly side, I've had clients where upfront in a job, before it's even gotten started, before dirt is turning, financial management's important then too. When you're buying out your purchase orders and all of the line items on your budget. I had a client who didn't communicate with their accounting department, who was very used to looking at use tax.
Oh,
And this project manager failed to make that communication and incurred a $375,000 use tax on some materials coming in from out of state, shaved some points right off the top of gross profit margin because they
yeah,
couldn't turn around and get a change order for it. And that was just a blunder for that organization. 375 grand that is cash that client will never enjoy.
yeah,
Talk to your accounting departments, and accounting departments share with your project management. On the flip side, on the positive side, I had a general contractor here in New Mexico that's done it so well for so long. They were able to see that they lose 1 to 3 points of profit margin in the last 3 months of jobs because they just tend to bleed. Everyone's saying, yeah, that job's done. Oh, it's done. It's done. But really, they're still in punch list item. They haven't demobilized. They're still burning on general conditions costs. And those things are just eating away at the profit margins. So they made the decision to financially manage even more carefully once a job was in its last 3 months or at 80% completion, and really were able to turn that around and preserve their margins as they continued on jobs. Great example of how that communication saves real money for the organization.
Wow, that is a really good one. And did you say you had another example as well?
Those are those two. So one with
Okay,
use
perfect.
tax and
Yep.
one with the job bleed at the end there.
Oh, yes. Excellent. Thank you, Chris. And then, Chris, one thing, if you could expand upon for a few minutes, because I mentioned it, we alluded to it, but I think maybe we circle back and talk a little more succinctly about it. And that is the job review process. Each
Mhm.
month, typically monthly, some are more frequent, some I see quarterly, but I think on the whole, monthly is the general average, where a PM has to provide an update, cost to complete, cost at complete, quantity left, hours left.
Mhm.
Two-part question for you, Chris. How many folks at contractors have you seen really have that process well dialed in? And secondly, can you speak to how you see that process flowing? And maybe our audience can get some tips and some help from that, if you don't mind.
Yeah, absolutely. Um, it's kind of a mixed bag, Frank. I would say it's probably 50-50. A lot of organizations I've worked with do it well, and a lot don't. A lot of them are still using paper even, which just
No.
breaks my heart. I'm
No.
allergic to paper.
Mhm.
Um, but the the way, in my opinion, that it should go, it should never be less than monthly. If you've got really short-term jobs that are only 6 or 8 weeks, you might consider doing biweekly. You may even, especially if that duration of job blends in with other jobs you're working on that are 3 to 6 months, you might exempt certain small jobs from the process. But this starts, it's got to be all jobs, big and small. It's got to be all jobs, long and short. It's got to be all jobs, whether they are in their last 3 months of construction or in their first 3 days of construction,
Mhm.
because again, those communication points have to occur regularly. Um, my opinion is this starts with your schedule of values. This starts in the bid process. Um, Especially again, think about that contractor that lost 375K on use taxes that needed to go in the bid. Um, and then typically you're getting a lot of contract cost life to date, billings to date, contract value, et cetera, from your accounting system, which means that data has to be up to date and accurate. If you're sitting down in your monthly meeting and saying, well, hang on, I just entered and it hasn't been approved, then you're looking, you've got garbage in, garbage out. You can't make the right decisions. You don't know your management points. Your estimates are going to be off. And what you're doing is you're just trying to put a check in the box. Sit down and slow down in these meetings. Make sure the data is entered and up to date. Make sure your project management team has that in enough time to tell the story that is contained within the numbers. We accountants, we know we're doing that on the balance sheet and the income statement, the cash flows, and we love telling that story with the numbers. You need to empower your PMs to do the same. They need that data. They need plenty of lead time. They need to see it updating regularly. And that's the biggest challenge, Frank, with doing something like this in Excel. It is not okay to update it just once a month. You need to be, although you may only sit down and meet together once a month, your PM needs to be looking at this on a daily basis. Um, don't let them get away with saying that's just paper pushing. That's just the desk job stuff that I don't like doing. It is part of their role. It's a critical part of their role. They need to be able to see it on their schedule, and that's why a system that's connected, especially through an API, is very critical and gives them that live data and an easy way to look at it. So instead of saying they won't do this or they don't want to do this, let's just make it easy for them and provide a data-rich environment in which to do it. Um, and yes, once you've got that data coming from the system, you need the PM to inform the story. It's the two working together.
Yeah, and you said something that really resonated with me. You said a lot, and I appreciate it. But it's all good stuff. And but data, because I see that when someone really focuses on these kinds of process improvements, it helps them improve other areas. In other words, they'll realize, our estimates aren't complete, or we're not getting our our pending change orders in there in a timely fashion, affecting our forecast. And as you do that, you start realizing, okay, so if we improve the timeliness and accuracy and completeness maybe of how we capture our pending change orders or our forecast on, if I'm a quantity based, my quantities to date and quantities left, it all starts to improve so that these KPIs are more accurate. The PM is fed more accurate info to give a more accurate response, because forecasting is just that. It's trying to predict the near future, right? And how do you do that? Really good data. So that was a really good point that you raised for me there, and I appreciate that.
Yeah,
So,
absolutely.
Chris, I want to be mindful of time, so I'm going to do two things. One, I'm going to pause and ask our colleague out there, are there any questions that you see that we should address?
Yeah, we got one from the audience. It says we have 300 to 400 jobs annually as a specialty contractor. What macro KPIs are most telling in that kind of environment, and why?
Love the question. Chris, you want to take a stab at that?
Yeah, so what it sounds like is you've got such a churn on jobs that uh, you're going to have a rapid turnover of things like your payables and your receivables, and even your schedule values, all of those things. And so what is more critical in that case is minding your total organization wide rather than down to the individual job, because any single job at that point, you could have probably one go completely upside down. And if it's 1 out of 300 or 1 out of 400, is probably not moving the needle for the organization. So then I do turn my attention more towards org-wide KPIs, things like profit margins, AR turnover, current ratio, working capital, and things of that nature, which are important, of course, from a financial standpoint. However, I would recommend you take a look at those jobs and see if there's any way you can bifurcate them and segregate them out. Maybe some of them are service jobs, some of them are installations, some of them are in-state versus out-of-state. Find a meaningful segregation of those jobs and see if you can collect that data at the job level, but then aggregate it up to that sector or division or department or whatever you call it. And that'll give you an idea of how to manage that type of job separately from kind of the org wide. But in that case, with such high volume, yeah, managing down to the individual jobs, a little bit less valuable in that case. And that's just my personal flavor there.
Appreciate it, Chris. John, any other questions out there? I'm going to start moving to wrap up as we have just a few minutes left.
There currently aren't any more questions.
All right, folks, if you have questions, put them out there. If we run out of time, we see a question, we will respond after the fact. Absolutely. And so, Chris, here's my question is, any tips or tricks in your experience, like we talk about ProNovos can help. Why? What do you see in ProNovos that addresses the forecasting project review process, WIP production that we're talking about today, frankly?
Yeah, I appreciate that. And everybody listening, I'm a volunteer here. I'm volunteering because I take this seriously on behalf of my clients, and I hope you'll take that as a piece of a serious response in my case. I've seen clients use QuickBooks, use Procore, Excel, Power BI for this. My opinion is each one of them has strengths and weaknesses. But I do think ProNovos has solved a lot of them for me and for my clients. You need a system that does this quickly and with ease and is directly connected to your accounting system so that you're not replicating data multiple times. ProNovos does that by integrating directly. Excel can't do that. We've discussed that a few times. Procore is the bread and butter of the construction industry. I'm sure a lot of you out there use it. It's fantastic for project management. It is not a finance tool. It has some financial metrics, but many of you have probably seen they don't always work the way they're intended to function, and certainly not the way we recognize them to function. So I would say ProNovos is a great addition to an organization already using Procore and can integrate directly with similar types of data. And finally, with Power BI, Frank, the big issue I see with Power BI and Tableau is most of you aren't developers. You may be able to get something working once, but you may not have the ability to update it. You may not follow the latest construction trend or the latest KPIs that are being added to a dedicated tool like ProNovos on a regular basis. And so the big issue with BI and Tableau is the tremendous weight it puts on your organizations to keep it up to date yourself. And that's why I have turned, and a lot of my clients have turned straight to ProNovos.
Well, and Chris, I'll add, because I did a lot with Power BI, it solves part of the problem. It's a great reporting tool, but it's not a process and workflow tool. So
Mm-hmm.
I can't really enter into Power BI or do it effectively. There's some limited ways you can, but it solves part of the issue. It shines a light on the KPIs, but I don't really have a way to I don't enter in Power BI my cost to complete or percent complete. I'll leave it at that.
Right.
So we're right on time. I'm going to launch one last poll, folks. This poll is, if you want to learn more or actually see the system in process, in use, an example, let me launch this so you can see how we address some of the topics we talked about today. You can just take a moment and fill this out.
We got some more questions that came in. One is from Charlie that says, we are a small general contractor. Is there an approach that is a better fit for a small GC versus a larger GC?
Chris, what do you think?
Yeah, that's a great question, Charlie. Thank you. I would say not really. The difference is you're going to have to, you may be building this process from the first time from scratch. And so I would definitely recommend, if you're not already a member of CFMA, go to some of those meetings and attend those meetings and ask your peers what they're doing. I would definitely look at ProNovos website under the resources tab. There's a lot of good content on kind of how to get started with this type of process and fuel it with lots of data. But in terms of the process itself and what you need to be discussing and things of that nature, I would say no. Small to large GC, not really a ton of difference. It doesn't matter how many commas are in your jobs. Your margins are probably pretty similar to the GCs that you're sitting next to. And therefore, especially in a GC environment, ever more critical to manage those margins because they're very slim. And so in that regard, having a tool to do it is going to be the best way to get started, I think.
Chris, I appreciate it. We went over a minute, so I'm going to wrap us up, but I'm going to ask one question. Humbly, sir, would you ever consider, in your busy schedule, coming back for a part 2, should our audience wish it?
Yeah, absolutely. I had fun. Thanks, everybody. Thanks, Frank. Frank's very, very generous.
Well, I love what I do, and you know that. I love the industry, and I was glad to have you here with us, Chris. I think we could have gone another hour, but we'll wrap up. Folks, the slides will be made available. If you ask, John or want somebody on our team can send them directly to you, as well as the entire recording if you want to share it out. So the one thing I will tell you, reach out to anybody at ProNovos, REDW. We all share one thing, a passion for this industry, and want to help. So with that said, enjoy the rest of your day. Thank you for being with us today. Take care.